Hi, this is Liqian Ren, Director of Modern Alpha Wisdom Tree ETFs. Welcome to China of Tomorrow podcast series, where we navigate China, India, Japan, and the broader emerging markets with members of Wisdom Tree and other industry leaders.
Hi, this is Liqian again. Today is September 16th, 2024. A quick comment on China policy changes. First, China had a very quick law that delayed retirement age for about 3 years and raised the number of years needed for anyone to be eligible for retirement. I'll go into details, but this was top policy news. The other news is economic numbers again, whether it's housing or total retail sales. Most of the top macro data is not very good, and several of them are under expectation. And China, we've talked many times in the last 2 years, and on Twitter I've consistently mentioned that China is in the risk of deflation. Actually, it put the housing component as close to 0% inflation, which under current China situation, it's definitely more negative than 0. So the non-housing component data, which is slightly more accurate, is close to 0.6% inflation. So extremely low. Even if you believe the government data, it's a very low inflation number. So in reality, total headline inflation has been, I think in reality, has been negative for a while. Obviously, when it comes to China, you have to know what kind of the data is generally close or versus what kind of data you need to make your own adjustment. So overall macro environment, my view is still negative. And I understand in the last 2 years there have been a lot of talk about stimulus. I think China is still going to maintain the current situation, which is have some stimulus. It's not zero stimulus, but some stimulus, but enough to maintain positive growth. In terms of how positive, I think right now the official number is definitely better than the real number. But if you also look at the electricity consumption, which is generally historically has been a good proxy for China's overall situation, there were a couple numbers like electricity, like number of real shippings. Those numbers are harder to manipulate, and from those numbers you can also see that yes, China's overall consumption is really weak, but it's not collapsing. So I think the so-called peak China is still not a necessary a good baseline. China will probably continue to grow, but grow at a very slow speed. People have to understand, if China's potential growth is close to 4 or 5%, people can argue about that. But if your growth is closer to 2 or 3%, then you will feel like a recession. So I think in China, they are definitely feeling this feeling of slowdown, whether you use the word of recession, which has the traditional definition of negative 2 quarters growth, which I don't think China is in recession yet, in recession, but it's in a, you feel like a recession, kind of a very slow growth environment. In terms of, I think many people who don't know enough China's bigger city is actually doing worse than third, fourth cities, mainly because the bigger city has had a bigger run-up in housing. So like Shanghai and Beijing, their housing prices has gone up much more than like smaller cities. And then because this housing bubble burst, the reverse is getting more, even though from prices, housing prices, because the government still somewhat, I wouldn't say control, but influence those prices. So you can see that China's price of housing has been down about 20-30%, but the transaction has gone down significantly. So So there are still the housing market. It's not yet so-called liquidly reach the balance point yet. That's but mainly because there are a lot of housing has a lot of illiquidity issues in housing, and the top government cities are Beijing and Shanghai actually still have restrictions of how who can buy houses. So I think a lot of people are still not yet convinced that housing in larger cities is not going to come back for a while. Even though last year when I went to China, I met a lot of family friends when I told them that I really don't think the housing is ever come back. And they always say, oh, big cities, they are different, golden positions, Shanghai. And I told them that if you have a macro shock, the bigger cities is not going to be immune. But a lot of them are not convinced. I think it still takes economics is not physical science. Human emotions play a huge role. So again, if you're interested to hear more, or you can reach out through sales. You can directly talk to us. So we look forward to talk to clients if you want to go into much deeper view on China. The second thing I mentioned is about the delayed retirement age. Here, the quick background in China, the retirement age first is mostly for the people in the city. If you're in the rural areas where I grew up, you don't really get a retirement. That's the difficulty of China, that the ones who actually pay dearly for China's growth don't get the benefits. Essentially the rural residents. So the city people, they generally have retirement age of female 50. If it's a skilled female, 55. A man is 60. But under this, China's pension system is going to be under stress. So it's been long overdue that they have to raise the retirement age. But the interesting thing is that this law essentially got passed on the same day that people know the details of it. So this is a bit unusual, that usually even in China, when you are going to pass a law, people know a little bit about the details of the law, even though you couldn't really change much, but at least you got a little bit heads up. But this time it was the day it passed is the day people learn about the delayed retirement age news. On the other hand, I don't expect much pushback, because this issue has been in headlines that people all agree that unless China raises the retirement age, or cutting benefits, or cutting some groups of benefits, because the government officials get twice more from private employees pensions. So it's not going to solve the retirement fund. So this time, the general is two things. One is the retirement age increased by about 3 years. So instead of 50, go to 53. But you get a little bit more flexibility. Like you can increase it 3 years ahead or 3 years later. The second thing is the minimum number of years that requires is going to be gradually increased to about 20 years. So now you need to pay 15 years. Later you need to, in the US it's 10 years, right? China's still a poor country, and US one day I think probably will also need to do a retirement, because the government is, the debt is very high, and ultimately you're going to have to pay if you want to have solvency in the Social Security. So that's what happened in China. So the retirement age law passed already, and it will become effective January 1st, 2025. So literally in a couple months. So the legal making process in China is quite different. Even though for something that people expect this from the government, and even though usually people do know the law a little bit before they pass, and mostly people don't really have much power to change it. But this time it was a little bit unusual that the law got passed, and so that I think it means that the top leadership has endorsed it and then, wanted it to be passed quickly. So these are the top headlines of China. I think ultimately, for people who, want to invest in China, the percentage of Chinese companies down is similar to what US companies down, which essentially is saying that in many specific areas, not the broad, China area, China, whether it's China or not, the so-called the risk from China is not necessarily the main driver, because essentially I'm saying that not for many companies, yes, the macro environment is very important for overall index, but for some specialized companies, the macro driver is sometimes secondary versus the main industry they are in. So it's going to, I think people who can, pick stocks well, in China is going to do well. In the broad base, you're going to have to be very patient. A couple of things that, overestimated the risk, I think, is the war risk. I've always said, I think, the war, you can never say never, right? But I think China having a war or even, military taking over Taiwan, that risk is still quite low. So I think, if China is able to find another growth point, and if in a couple of years US and China relationship find a balanced, more balanced equilibrium, then China equity will be considered, a value bet. So, but day to day, I think for a very short term right now, because the negative headwinds is still pretty large. So unless you're willing to take a risk, China equity doesn't move with a huge beta. So a little tiny beta of good news can get, equity up 5 to 10% easy. But that also means the other side. So if you are willing to take risk and have a little bit power in timing it, then it's still a good place for people to play. So overall, these are they are, day to day, there are many, many headlines on China. But I think for the last 2 weeks, these are probably the top economic news. Thank you. And look forward to, discussing with people who are interested in understanding about more, how to look at China in a, really cold-hearted but in a balanced view.